Good evening, Satya. You can see I'm on 30 minutes and I'm on 30-minute candlestick part. I have fractals here, that is Billy Williams, and I have awesome oscillator. These are the two things. This video basically will explain about point and figure and noiseless charting for the professional approach. That means this is not for the intraday. It is a positional trading in a futures market. Okay, so this works with every single concept of the or every single stock or whatever it is. It works with every single of that. Okay, so let's go and try to understand what exactly we look into it. Okay, point and figure, you can download a free PDF book on the Google search, which is available. I think one of the leading author is Jermida Plus, I think, and there is one more author is there in point and figure. They are the best authors. You can go through the book in case if you are interested in understanding the point and figure, because point and figure, the subject itself, the subject itself is very powerful. It's known as an early 1900 trading method. Actually, it's known as an early 1900 trading method. Now, in the point and figure, people use many things. I do not consider any tools because we use only trend lines. But people use, for example, they can use moving averages, MA cross, moving average cross. The once the crosses takes place somewhere here and break below this, you can use this is 9 by 21, I think 9 by 21. 9 by 26, 9 by 26. You can use a moving average cross. In the place of moving average, what I do is, if people want, Krishna, I need something to make a deal here. I mean, the trade that has to have a very fundamentally, it has to always go through the perfect basis. So what I do, what I suggest is, I suggest them to go with the Danchin channel with 30% shading. Just a second. Okay, with the 30% shading, and the input is in the place of 20, we use 9. So Danchin channel basically calculates the 9 period price momentum of the point and figure, not your traditional candlestick. Now you get it? Yeah. You can reduce it to 15 minutes, but when you reduce the 15 minutes, the volatility goes up. You can see now for 15 minutes it is 41.25. Of course, 15 minutes is very good, no issue. But what we do is we take a 30-minute this thing where the volatility reduce contracts and proper decisions can be made, and the reversal bar is 3 bars. That means 39 into 3. It's almost 108 point stop. If it has the reversal bar, 3 bar has to come. Okay. So we use 30 minutes. The one more traditional way of handling a point and figure is we use 45-degree angle trend lines. See, no higher low has been violated here. Remember this. No higher low has been violated here, and it gives us a very clean trend. Okay, until here. It's an objective based trading, it's not an a subjectivity, it's an objective based trading. What we do here basically, what we do here is that we enter double top buy. Usually we enter double top buy. This is called double top buy. I will change the color to orange, on not orange, something blue. This is a double top buy, and here it is double bottom exit. So this becomes a double bottom exit, and it is so the depth is so correct here that you get an entire trade of 2859 points. You can change the contracts if the contracts are being changed. For example, this is a March, right? March 3rd. Yes, you got this. Sorry, April 25. 2025 it is. This data is 2025. So we have somewhere here we come to December. So the data moves very slow here. So this was an exit code, so that we made an exit over here, and this gives you around very fantastic. You have to roll on the contracts and you have to sit with the contract. Okay. So where do the double top buy comes? Where do the double top buy comes? The double top buy always comes here. It has to make a one pivotal out. This is called out of the pivotal. Previous pivotal, break up the previous pivotal and create a one pivotal here. It has to create a higher low. Then it has to close above. So this becomes an entry. So this becomes the entry. And that entry gives you, if you observe carefully, that entry gives you an price of nearly 1400 points. So there are two things you can do in this when you are doing this. The first thing is you can buy Nifty Bs or Bank Nifty Bs. So when you buy Nifty Bs, basically you don't have to revolve your contracts. You keep making money in the Nifty Bs. Okay. As long as the Nifty is going up, you keep making the money. So this is 1451 points. Okay. So this is a recent data, although it is a recent data, but what I'm trying to say is that you have an edge. See, again it is 45-degree angle, no higher low has been broken. I will turn this into black. Oh no, let me keep that. This I'll turn into black. Again there is a 45-degree angle, there is no higher low break. Okay, but there is an exit here. The exit is here. I'm sorry, I should have shown this much only. Okay, the exit is this 967 points. Why the exit is this? Because we have trailing stop in it. So this is the exit, and then after the exit, it just barely made one move high. The first indication came here, that is after making a new high, breaking a new pivot. See, this is called a new pivot. It's a higher low, making a new pivot, but it breaks the first time, it breaks the pivot here. Okay, I will change the color in case if you don't understand. The first time it breaks the pivot here. This is the higher low, it breaks and creates a lower high. Okay, so what we do is we will wait, we will short sell here and the stop above this. It should go to this level, but in this case the trailing stop triggered over here somewhere. The trailing stop triggered, it came to one more low, it came a new low here, and then we got triggered by the trailing stop. So yes, this was a zero-sum game. That means we didn't lose, we didn't make money. But here again it made a largest break here, and from there it was a higher low, and this was a stop to us. And when it made a large gap down, that is an indication of 1, 2, and this is a third one. Okay, so basically now whatever the upside move you are looking is, you are looking only above this. Okay, so now we know that it has made this. We can go to the lower time frame also. Let's clear everything. We can go to the 5 minutes time frame. In case if you are comfortable, say you want to make early entries. So when you go to 5 minutes, you can go to 1 minute, 2 minutes. 2 minutes is a better feature. In case if you are a only weekly trader, 1 week you entered, 1 week you made an exit, 1 week you entered, 1 week you made an exit. So this is the first. It made a higher high here. It first broke the first pivot here. Then it made a lower high. This is called lower high. When the lower high, when it breaks this pivot, so we are going to sell below this, and our stop will be here. I'm just on 2 minutes. So what happens when you keep practicing point and figure? Basically, it will give you an idea of entering the market. So from here, we are targeting for this, that is 698 points. What was the risk? The risk was from here, the risk was only 120 points. So we have almost 1:3 basis. 1:2. We always take 1:2 or 1:3. So let me put that short, this thing. Yeah, this is, sorry, 497 points, and our target was 1:2 is our target always. So yes, this meets the 1:2. Okay, then it made a pullback, and you can always say that once the pullback is broken, once it breaks the fractal, here was the early entry. This was the early entry because this is a gap actually. So this would have been an early entry, and this would have been a stop, and you need to learn these. They are not easy to understand, but you have 1:2 or more than that. Sometimes you get the gap, and you get around about 700 points with a 250 points stop. But remember, the stops are also high, right? So now what happened is, now the depth is coming down. This depth, and this depth, it's coming down. So any buy setup, it has to make a for a buy setup, it has to make this one anchor column here. This is called a mini anchor column. Okay, then it has to give a higher low, then break up that, close above is in a boom. So that's a buy setup. Okay, so why do we use this, despite we know that other methods also, we know wave theory, we know this thing. This is where things come and meet your expectation, where you see, okay, now there is a divergence also. There is a divergence in this. There is a divergence in this. 17-point fixed range. Okay. So usually these divergences will play a part. Okay. So this is wave 1, this is wave 2, and this is wave 3, and we are looking for a wave 4. So the ideal understanding will come with the people who have made this. See, when you come to point and figure, it is exactly 1.618. When you come to point and figure, and when you check for the retracement, Fibonacci retracement, what is the Fibonacci expected Fibonacci retracement? Again, I am telling you that it can go up to 0.382, 22, 24 to 24. It can go. Okay, and this is how we take a judgment. This is how we take a judgment. So the it can gap up tomorrow. So we booked actually we booked our short sell somewhere from here. We booked our short sell around about 1200 points. Just a minute. Yeah, some 1800 something, 850 points we booked actually. There was a lot of slow it was, so we said we will book it. Okay, again it's a part where people have to understand. What happens if you go more than 30 minutes? What happens if I go more than 30 minutes? 30 minutes basically, above 30 minutes basically will give you a figure that is suitable for weekly trading basis. That is suitable for weekly trading basis. It's not suitable for index trading on 5-day or 4-day basis. So we don't suggest that until you practice dedicatedly, you cannot go for it. You can go to 1 minute in case people go for 1 minute also. See, there is it's not an anchor column, but once it surpasses 23,422, the anchor column is representation of anchor column will become an anchor column. Once that anchor column, suppose for example, if it gaps up by 200 points tomorrow and runs to 23,811, another 1.6%, so that becomes an anchor column. So we are looking somewhere here, 23,820. Monday's open can become a 23,400 and can go up to another 400 points. It's a fishy. It's a fishy in the sense this down move was deliberately to misguide the people. Let's see. Okay. All right. Thank you.